Welcome to another video on this channel. Today we are going to look at a mutual fund category called as multi-cap fund. My name is Paresh. I am an NISM certified and AMFI registered mutual fund advisor and distributor. This is my ARN 334516. As you all know or might know that the purpose of this channel is to convey the basic concepts of mutual funds and mutual fund investing in a very simple and easy to understand way to new investors. So people who are new to the investing world, especially new to the mutual fund investing world, they are the target audience of this channel. Before we move ahead, this disclaimer is necessary. Mutual fund investments are subject to market risks and you need to read all scheme related documents carefully. The past performance of mutual funds is not a guarantee of future performance of any scheme. So when a new investor comes into the market and they look at the universe of schemes that are available, the first emotion is that they get confused because there are just too many fund categories. If you go to almost any mutual fund company website today, you will find there are around 50-60 different schemes, right? So there is this arbitrage fund, flexi cap, hybrid debt, mid cap, focused, large cap, ELSS, multi cap. What is this all? What is this all terminology, right? So we all have been hearing this advertisement, mutual fund sahi hai, mutual fund sahi hai, for the last 8-10 years, I guess. And yes, mutual funds are right, especially if you are new to the world of investing or don't know much about the stock markets. However, not every scheme is right for every investor. Right? So, depending on your risk profile, depending on your investment horizon, depending on your investment goal, and depending on the kind of uh, risk or the returns that you're expecting, uh, there could be different schemes for different people which are right for them. And that is the job of a mutual fund advisor. So I am a registered mutual fund advisor. At the end of this video, you will see my contact details. You will also see a link to my app, which you can download and start investing in mutual fund schemes online. If you are not comfortable, downloading an app, in the description of this video, you'll find a link to the website where you can go and register yourself and start investing in mutual fund schemes. So first of all, what are these different types of caps? So you keep hearing these phrases, right? Large cap, mid cap, small cap. So what is this cap? So cap basically is an abbreviation of market capitalization. What is market capitalization? There is a very simple formula. Market capitalization is equal to number of shares outstanding into market price per share of a company. So of all the companies that are listed on a stock market, you can actually arrange them in the descending order of their market capitalization. What does that mean? The company with the highest market capitalization will be ranked 1, and the company with the lowest market cap would be ranked 4,000, 5,000, 6,000, whatever are the number of companies listed on that particular stock exchange. So once you order these companies in the descending order of market capitalization, the top 100 companies are called as large cap. Right? So these are typically the huge corporates like L&T, Tata, Birla, Infosys, those kind. The next 150 companies, okay, in the list, which means the companies which are ranked 101 to 250th in terms of market capitalization are called as mid cap companies, and rest of the companies are called small cap. So rank 251st and beyond, they are called as small cap companies. This is a very simple framework, but very important to understand, right? So when you are investing in a particular category of mutual fund, you know where your money is going. So let's say you invest in, say, a mid cap fund. The fund manager will invest a majority of your money into the companies which are ranked 101st to 250th in terms of market capitalization. When you invest in a small cap fund, your fund, a majority of the money that you put into that small cap fund will be invested in companies which are ranked 251st and beyond. Very simple to understand, very simple framework, but very important to remember, right? So what is a multi-cap fund then, right? So a multi-cap fund has to invest minimum of 25% of the assets in each of these categories. So the large cap, mid cap, small cap, the fund manager must allocate at least 25% of the AUM to each of these categories. So in effect, what this means is that roughly, let's say you put 1 lakh rupees into a multi cap fund, at least 25,000 rupees would be invested in large cap companies, at least 25,000 would be invested in mid cap companies, and at least 25% would be invested in small cap companies. The remaining 25%, the fund manager has flexibility in terms of allocation. Fund manager might want to increase the allocation to large caps, mid caps, small caps. Uh, so a typical allocation could be not a typical, but for example, one allocation could be 50% in large caps, 25% in mid caps, and 25% in small caps. Typically, not 100% of the money which is put into a scheme by investors is invested in the stock market. The fund manager also has to keep some cash in hand for redemptions. So typically, the cash holding percentage varies anywhere between say 3% to 10%. But in this multi-cap category, if you invest in a multi-cap fund, you are guaranteed to get at least 25% exposure to each of these market cap categories. This is a very important feature. This was a very, I won't call it a very recent scheme, but this is one of the new types of categories which were introduced by SEBI. I think just about 3-4 years ago, this category was launched, and it has received encouraging response from investors. Right. So why should you invest in multi-cap funds? So this is a table on the left hand side which you are seeing, right? So over here, financial year 2006 to financial year 2024, right? So the results or the returns given by various categories are outlined. This is a color coded table, which means the color green indicates rank 1, the color red indicates rank 3, and the color yellow indicates rank 2. So if you look at any of the columns, right? So Nifty 100 TRI is basically large cap companies. Then the second column is for Nifty mid cap 150 TRI, which is a mid cap, and the final last column is for small cap. So if you go column wise, okay, you will not see a single column which is uh, majorly in green, right? And that is the entire objective, right? So if you invest in pure, say, a large cap fund, which is not a bad strategy, but obviously the volatility over there reduces. But if you'll see in terms of returns, the large cap has probably ranked only 6 times out of this 19 years in rank 1, right? Mid cap has ranked uh, uh, first only 4 out of 19 times in the last say 19 financial years, but small cap has ranked 9 times out of 19. So does it mean that because small cap has the highest number of rank 1 performance out of this 19 funds, you should put all your money into small caps? No, it does not mean that. Why? There is a video I have made about the small cap fund category on the same channel. If you have not watched it, I suggest you go and watch it. So see, each of these categories has its own pros and cons. So in terms of volatility, the large caps always have a low volatility. What does that mean? If the market falls by say uh, you know uh, 20%, not all large caps will fall by 20%. Some of them might fall more than 20%, but a lot of them will be uh, uh, the fall will be slightly less than 20%. Maybe they would, a majority of them might fall by 15%, 16%, whatever. But mid cap and small cap is a completely different ball game, right? Mid cap has still a moderate volatility, but it will still usually falls more than the market. So let's say the overall indices have declined by say 20% over a few weeks. Mid cap index will be down by maybe, usually it will be down more than 20%. Small cap will be the worst affected usually because it is highly volatile. These are very small companies. The liquidity over there tends to be very, very narrow compared to say large caps or even mid caps for that matter. So the entire idea of this category is that you get a balanced exposure across all three capitalizations, without any one particular market cap segment dominating the overall portfolio. So different market cap segments outperform each other at different times. So by combining them together, the blended return over a long period can be better in terms of risk adjusted returns. See, as regular viewers of this channel will know that over a long period, small caps, a pure small cap fund will always tend to outperform all other categories, including multi-cap category. But the returns are highly volatile. Right? There would be periods where a pure small cap fund would be in the red for a long period of time. And for those who do not want to take those kind of risks, for those who do not want to tolerate those kind of volatilities, there are many other categories where you get an exposure to small caps, but with a limit, right? So multi cap is one of them. Flexi cap is another category. We have also done a video on flexi cap category, and you might want to watch that also, right? So now we come to this point, right? So what is the difference between multi cap and flexi cap funds? If you have watched the video on flexi cap, you will also know that flexi cap also has a small cap component, right? So the fund manager, a flexi cap fund manager, can also invest in small caps if they want to, right? But what is the main difference? See, theoretically a flexi cap fund can be any of the following. It could be 100% large cap fund, it could be 100% mid cap fund, or it could be 100% small cap fund. What does that mean? The the fund manager of a flexi cap fund can invest 100% of its asset in large cap, or 100% of its assets in mid cap, or 100% of its asset in small cap. But a multi cap fund can never be any of the above. By regulation, this is the SEBI regulation, it must maintain at least 25% exposure to each of the market cap segments. Now, this is a benefit as well as a drawback. Why is it a benefit? Because the fund manager of a multi cap fund cannot become too defensive, right? So if the market turns very volatile, a flexi cap fund manager could, and in most cases would, shift most of the holdings towards large cap. We have seen this in the video on flexi cap, that a lot of the flexi cap funds currently are highly biased towards the large cap. Anywhere between say 50, 60, 70% of their assets, or even 80, 90% of their assets are in large caps, because currently we are in August 2025, the market is highly volatile, so they don't want to expose their portfolio to this kind of volatility, so they have shifted a majority of their assets to large cap companies. But in a multi cap fund, the fund manager cannot allocate more than 50% to any of these category. At no point would a multi-cap fund have more than 50% large cap exposure, which means the fund manager has to maintain 25% in mid cap and 25% of in small cap categories. Now this has a downside also, right? When the markets turn extremely volatile, or you might have heard or you might have read news that there is too much overvaluation in small cap, there is a threat of a bubble formation in small cap or mid cap, and these categories do tend to get overheated quite quickly. um, and if that is the case, the fund manager has no option but to keep investing, at least 25% of the AUM in small cap, and at least 25% of the AUM in mid cap. Even though the fund manager might feel that these categories have turned a little too volatile for an investor's preference, but because of the rigidness of this category, the fund manager has to keep allocating to mid cap and small cap. As I told earlier, this is both a benefit and a drawback of this category. So those people who want to maintain an exposure to the highly volatile but slightly more rewarding categories of the mid cap and small cap segment of the market, you might want to get an exposure to a multi cap fund. So let's look at how multi cap as a category has given returns over the year. As I told you, this is a fairly recent category, so the 5-year and 10-year data is not available. But if you look at equity multi-cap, right, the 3-year returns are 18.8, and note that this is a category average. So there would be funds in this category which have given higher than 18.8% returns over 3 years, and there would be funds which have given lower than that return, right? But so it falls somewhere between flexi cap and mid cap. You'll see flexi cap returns are lower than multi-cap, understandably so, because flexi-cap, the fund manager has complete freedom in terms of allocation to different market cap segments. And given that the market has turned a lot volatile, the fund managers tend to be a little more conservative, and they tend to allocate a lot more to the large cap uh, segment to avoid the volatility and maintain some sort of stability of returns. So this was about the category as a whole. So what are some of the well-performing multi-cap funds, right? So these are some 3 or 4 funds which I outlined over here. Note that almost every AMC or a mutual fund company has its own multi-cap fund these days. So these are only a sample representation. There are many other schemes But these are some of the more popular ones. If you look at, there is HDFC, Nippon, SBI, ICICI Pru, and let's look at their 3-year returns. Very good returns. If you look at, see, almost in excess of 20%. Uh, and this is an annualized rate. So this is an average annual return over 3 years. This is not like you get 20.86% after 3 years. This is like on an average, the fund has delivered around 20.86% return. I'm talking about HDFC multi-cap fund. So this was about the multi-cap category. If you want to plan your mutual fund investments, you can contact me on this WhatsApp number 9757309269. I am a certified and registered mutual fund advisor and distributor. I can definitely help you in your investment journey, identifying what are the right schemes for you, identifying what is your goal, based on that, what is the right SIP amount for you, and so on, right? But if you want to do it, still do want to do it yourself, there is an app for that. On the right hand side, you can see a QR code. You can scan it using your camera, download the app, register yourself, and start investing in mutual funds. There is a link to the website also in the video description. If you're more comfortable transacting through a website, you can click on that link and start transacting on the website. So thank you for watching this video. I hope I was able to convey the essence of this multi-cap category to you in a simple to understand way. Thank you.